Hi, welcome everyone once again. This is the Advanced Audit and Assurance class. It's applicable to those taking the ACCA, ICA, and generally if you want to study accounting and auditing, these lectures will definitely be helpful for you. Very, very helpful for you. So today we'll be talking about corporate governance, as I indicated earlier, and we'll also be talking about issues relating to money laundering and compliance issues in general. So let's understand what corporate governance is all about. So corporate governance is simply how companies are managed and administered. So how companies are run, how companies are controlled, how companies are managed. That's all about corporate governance. In particular, it focuses on the role of directors and their responsibilities to shareholders. I'm sure you've heard of the principal-agent relationship, right? It applies when it comes to shareholders and directors. So the shareholders are the principal. The shareholders are the owners of the company. They are the principals. And the directors are the agents. The shareholders employ the directors to run the business. And in every principal-agent relationship, the agent has to act in the interests of the principal, in the interest of the principal. So that's very, very important to understand. Very, very key to understand, very, very important to understand. Always remember that the agents must act in the interest of the principal. So the managers must act in the interest of the owners or the shareholders. So as I explained, the directors are seen as the agents and the shareholders are the principal. Then let's talk a little bit about directors and auditors' responsibilities. We touched on this in much detail in my previous lectures. So if you haven't watched those lectures, please go back and go and watch them. As I always say, subscribe to this channel so that anytime I post a lecture here, you'll be the first to get it. All I'm trying to seek is for you to pass your exam. So just subscribe, hit the notification bell. It's like a ring bell. There, hit it. And anytime I post a lecture, you should be notified of it. And you can watch it and definitely ask me questions if you want to. You can ask questions in the comment sections. We also have a WhatsApp group, and you can also join the WhatsApp group and ask any questions that you want. So directors have their responsibilities, which is the preparation of the financial statements, the design and implementation of controls. Auditors also have their responsibilities, which is to give an opinion on the financial statement. They also have to audit the financial statement. So we've talked about it in much detail in previous lectures. So let's look at the audit committees in Ghana. So the audit committee should comprise at least 3 directors. 3 directors, the majority of whom should be non-executive. So when we say someone is a non-executive director, that director is not necessarily involved in the day-to-day affairs or the day-to-day running of the company. So it's basically saying that the audit committee should comprise of at least 3 directors, the majority of whom should be non-executive. Then the membership of the audit committee should ideally comprise directors with an adequate knowledge of finance. They must understand finance, they must understand finance, accounting issues, because it helps conversations when it comes to the audit committee, and you understand why, because of the functions of the audit committee. The chairman of the committee should be a non-executive director. We already explained who a non-executive director. So the chairman of the audit committee should be a non-executive director. The CEO, the finance director, and the head of internal audit, and a representative of the external auditor should ordinarily be invited to attend meetings, audit committee meetings. So these 4 key people, the CEO, the finance director, the head of internal audit, as well as a representative of the external auditors, should ordinarily be invited to attend meetings. Okay, then let's look at the primary functions of the audit committee. The first thing is to recommend the appointment of external auditors. So they recommend the appointment of the external auditor. So they give the recommendations when it comes to that. And they also liaise with external auditors. So you can see here that they do a lot of work with external auditors. They liaise with external auditors for the purpose of maintaining audit quality. Very, very important. They also review the adequacy of internal control systems and the degree of compliance. So these are all things, and you can't do these things if you don't have knowledge of finance and accounting. That's why it is required. That's why it's required. They also provide a direct channel of communication between the board and the external auditors. You know, they serve as like a middleman. So they give that channel of communication between the board of directors and the external auditors. So they play a liaison role, kind of. They play a liaison role. And they also report to the board on all issues of significant or extraordinary financial transactions. So if there's any significant financial transaction, they step in and report to the board. Then you have more on the audit committee, the authority of the audit committee. So they have the authority to investigate any matter under its terms of reference. They have the authority to investigate any matter under its terms of reference. So they have investigative rights. And they also have the right to be provided with necessary resources to carry out their investigation. They also have a right to access necessary information. Very, very key. Very, very key. Very, very key. One thing you should note, this is very, very important. Every listed company should report the establishment of its audit committee in its annual reports, if it hasn't done so already. So you should report on the activities of the audit committee. Always report on it. Report on the activities of the audit committee. And the audit committee should also perform an annual review of the corporate body's internal control issues, and compliance matters in general. So the audit committee themselves should be performing an annual review of issues relating to internal control and compliance matters. Very, very important. So let's talk about money laundering. Money laundering. So when we talk about money laundering, if you go into different companies, you see an anti-money laundering / compliance team. All these things. Money laundering is a very, very important area, that needs a lot of attention. So when we say money laundering, it simply means like to do laundry means to wash something, right? So you are washing dirty clothes for it to become clean. So when you are doing money laundering, you are washing dirty money and making it look clean. Even though the money is dirty, you wash it, which means you channel it into totally different activities that make the money look clean. So let's look at a definition of money laundering. It's simply defined as the process by which criminals attempt to conceal the true origin and ownership of proceeds from their criminal activities. So this is the plan of criminals, right? They try to conceal the true origin of the proceeds and who owns those proceeds, because it's like we said, dirty money, it's money that has been stolen. So they try to conceal the true origin and ownership of the proceeds. And you would see that as we go through the stages of money laundering, you see how they do that. So stage one is placement. The first stage, this is when the criminal places illegal cash in what appears to be a legitimate business transaction. So the criminal gets these stolen funds and then they put it into a legitimate business transaction. So for example, they can get illegal money and put it into a restaurant, put it into real estate, something that appears to be legitimate, so that you do not trace the true origin and ownership of those proceeds. Then you also have layering. Layering means that the funds move through several transactions or layers. When we say layers, it means through several transactions. So the transactions will be complex and will move through different countries, to go through different countries, through different bank accounts, through different states, different countries, different continents, to make the source of the illegal funds more difficult to trace. Very, very key. Then you also have integration, which is the final stage. The funds here are moved back into the economy to convert them into a legitimate form. So here you are converting the money into a legitimate form. For example, you purchase a property, you do real estate, you use the money to buy real estate. So at the end of the day, the illegal funds cannot be traced at all. So you are integrating the money into the economy by purchasing a property, by using it for some business. So always remember, placement, layering, integration, money laundering, very, very important. So there are various criminal offenses connected with money laundering. So examples include conspiring or attempting to conspire with any criminal who is in this activity, aiding, abetting, or even counseling people who are engaged in this activity, that's also criminal, and failure to make a disclosure, or tipping off when you have some information about money laundering going on and you don't tip off and you don't let the necessary authorities know, it's subject to a criminal offense. Very, very important. Very, very important. Also, if you are possessing or in any way dealing with or concealing the proceeds of any crime, you are also liable. So if you are possessing proceeds that are criminal, that are illegal in nature, you also definitely fall under this criminal offense category. Now, there's a lot of regulations around money laundering, and due to the work of intergovernmental bodies such as especially the Financial Action Task Force on Money, many countries are now beginning to have legal provisions to prevent money laundering activities. So in Ghana, for example, we have the Anti-Money Laundering Act 2008, we have AML regulations, we have an amendment to the Anti-Money Laundering Act, which is Act 874, and all that. Because of the seriousness of this issue, countries are beginning to provide regulations to help stall or stop money laundering activities. Another one, you should also know that there's a group called the Financial Intelligence Center. It was established in accordance with the Anti-Money Laundering Act 2008. Anti-Money Laundering Act 2008. So they are responsible for, analyzing, interpreting, and disseminating financial intelligence in Ghana and abroad. And their mission is to protect the Ghanaian economy from money laundering and terrorist financing. Very, very important. So these are some parties that are doing a lot of work. The Financial Intelligence Center doing a lot of work to ensure that money laundering activities are definitely stopped. So how does this all relate to, accountants, auditors, and all that? So money laundering may be of particular relevance to accountants and in particular auditors. In cases where criminals establish companies and use transactions between their companies to launder their dirty money, So auditors and accountants have to be aware, because you do not know the client you are auditing, whether this client is into money laundering activity. So the auditor must always be skeptical when it comes to those things. They must be aware, is this company into money laundering activities? Another thing that is important for auditors is that they need to ensure that systems are in place to stop, there's a general organizational commitment to stop anti-money laundering activities. So specific obligations for detecting and reporting suspicions of money laundering are placed on professional firms and financial institutions. Very, very important. Very, very important. Very, very important. So organizations must show commitment. If you are auditing the client must show commitment that, oh, I really want to stop anti-money laundering. I really want to stop money laundering activities. So the clients will be doing things like training and educating staff, establishing procedures within the firm to ensure that there's no money laundering happening, appointing a money laundering reporting officer. Even in some companies, there's a whole anti-money laundering team, a compliance team that is dedicated to stop this menace. So auditors must always be on the lookout for that. What is the organization's commitment to stopping money laundering activities? And even the client itself, the auditor must be aware that is this client involved in such activities and must, put on their skeptic cap in order to find out all these things. The effects, so let's talk about the effects of non-compliance. We are moving on to compliance, of regulations. We've talked about a lot of regulations. We are moving on to compliance of some of these regulations, So what are the effects of non-compliance with laws and regulations? So some laws and regulations, as you always know, have a direct effect on amounts and disclosures in the financial statements. So there are two kinds of laws and regulations. Some have a direct effect on the amounts in the financial statements. For example, tax has a direct effect on the financial statement. There are others too that do not have a direct effect, and doesn't mean it's not important. I'm just categorizing it into two. Other laws or regulations too do not have a direct effect on the amounts and disclosures in the financial statements, but we need to comply with these regulations in order to avoid any fines. So what's an example? A typical example is compliance with environmental regulations. It might not necessarily have a direct impact on the financial statement, but it's definitely something that we need to take care of to avoid any fines or to avoid hurting, our environments. So who does the responsibility for compliance with the laws and regulations reside? Very, very important thing to understand. Who does it reside with so that we know who is responsible? So the responsibility for ensuring that an entity complies with laws and regulations lies with management. It lies with management and not the auditor. The responsibility, let me repeat again, the responsibility for ensuring that an entity complies with laws and regulations lies with management. Lies with management and not the auditor. And it is management's responsibility to implement policies and procedures that will enhance the prevention and detection of non-compliance. So some of the things that management will do is to monitor compliance, to discipline employees who breach the code of conduct, to train employees on compliance issues. These are some of the things management can do. To also establish appropriate internal control systems, because when internal control systems are good, then it makes compliance a lot easier. Another thing management should also be doing is keep a register of all laws and regulations, so that the management has to be abreast. They must keep a register. Okay, these are the laws and regulations we have to follow, because there are amendments that happen, and so management must also keep a record of all significant laws and regulations. So these are some of the things that management must do. But first of all, you need to know that the responsibility for compliance lies with management and not the auditor. The primary responsibility lies with management. Yeah. So let's look at the legal environment. Let's look at non-compliance. So what are, again, the effects of non-compliance with laws and regulations? ISA 250, which is consideration of laws and regulations in an audit of financial statement, requires the auditor to basically obtain a general understanding of the regulatory framework. Remember, we talked when we were having the lecture on international standards on auditing about understanding. The auditor has to understand the applicable regulatory framework. The auditor also has to obtain sufficient appropriate evidence when it comes to issues of compliance. The auditor must also perform the proper audit procedures to help identify instances of non-compliance. Another thing the auditor is also supposed to do, auditor has a lot of things, is document all suspected or identified instances of non-compliance. Very, very important. So the auditor must document, okay, if he sees any instances of non-compliance, both the ones that they identify and the ones that they suspect, they should note it down. The auditor should also obtain written representations from management when it comes to issues of non-compliance, because the management must disclose it to the auditor. So the auditor must obtain written representations from management when it comes to the issue of non-compliance. Very, very important. So these are some of the things that the auditor must be doing. Remember, I talked about the auditor understanding the regulatory framework, obtaining evidence, doing the right procedures, documenting any instances of non-compliance, and obtaining written representations. So these are some things that you need to keep in mind as you go through issues of non-compliance. So what are some of the indicators of non-compliance? What are some of the things you would make you smell non-compliance, basically? Make you smell non-compliance. The first one would be where the client is investigated by regulatory organizations. If the client is undergoing investigations, then it's an indicator of non-compliance. Another indicator of non-compliance is payments for unspecified services. So sometimes you see payments to somebody that we don't even know. It's an indicator of non-compliance. Another indicator of non-compliance is unusual payments in cash. Just unusual. You don't know the purpose of the transaction, but it's so unusual. Another indicator of non-compliance is unusual transactions with companies registered in tax havens. So there are companies that reside in tax havens. So tax havens are basically countries where there's companies literally pay little or no tax at all. So when you have unusual transactions with companies in those locations, it's also an indicator of non-compliance. It could mean there's some non-compliance going on. It's a lot of things that could indicate non-compliance. Unauthorized transactions also, unauthorized transactions also. Sales commissions that appear to be excessive, Why would you pay commissions so high? Why would you pay? Because as a company, you want to reduce your cost. So why would you pay commissions so high? So if you see extremely excessive sales commission, it's an indicator of non-compliance. You have, let's talk about actions by the auditor in the event of non-compliance. Then we would wrap up this topic. Actions by the auditor. So when an auditor sees non-compliance, what are the things they can do? First of all, the auditor needs to understand. Talking about understand. So in your exam, please keep this in mind, understanding. So the auditor must understand the nature of the act and the circumstances. that occurred around it. The auditor must also evaluate the possible effects of non-compliance on the financial statements. So the auditor must gauge, okay, so this non-compliance that has happened, what will be the impact on financial statements? The auditor must also discuss suspected non-compliance issues with management. So the auditor must, take it upon themselves and go and discuss it with management. And the auditor must also understand that non-compliance can also have impact on other areas of the audit. So the auditor must assess, would this have an impact on other areas of the audit or not? And the auditor also must consider how to report the non-compliance with those charged with governance. So it's a lot of actions here, right? But in a nutshell, what I would say is the auditor must understand the non-compliance issue. The auditor must understand the impact of the non-compliance issue. And the auditor must also consider how they are going to report this non-compliance issue. So you see, I've summarized it very beautifully for you. So these are some of the actions that the auditor must take. So thank you very much. This brings this lecture to an end. Please subscribe to this channel if you haven't, and hit the notification bell so that anytime I post a lecture, you will be the first to get it. We have a WhatsApp group. If you look in the description box, we have a WhatsApp group. You can always join the WhatsApp group. And if you have any questions, you should definitely reach out and we'll be there to help you as usual. Thank you and have a good day.